Hello, Warriors. How's everyone doing? Okay. AJ, everyone. Mary.
Good early morning, Dale.
Good morning, Kman. How are you?
Very well, thank you.
Good, buddy. So yen relenting today? News behind it?
No, not much news. The usual BOJ, the Adachi, another one of the BOJ members saying that despite deflation seems to be over, not yet time to start aggressively normalizing or hiking rates. So he gave the dollar yen the excuse to go and have a look above 130, but we've shied off since then. On the other hand, yen crosses still look big, right?
Okay. Good morning, Jordan Robertson. Welcome to F.A.C.E. And do you think that this is going to be a failing rally, Kman, or do you think it has enough juice to blow to new highs into the Fed?
If US 10s go back above 3%, I reckon we are seeing new highs. It's going to depend on yields, really. Dollar yen ticks up and down with yields. This morning we hit I think 295 or so on the 10s, and then
yesterday.
And then as it came off, we also came off from the highs in the dollar yen. The dollar has actually been on the defensive this morning because the rest of the yields is also rising. Sterling. I showed it this morning on the flow show. Well, that's I think one of the reasons why the dollar looks relatively rangy right now is because all the rest of the major yields are also rising. And that keeps it in a range. The correlations on yields are relatively tight right now.
Yeah, I know a lot of people, myself included, would like to buy it down here. And when bottoms and tops come, I'm sure you've seen this, and you weren't there for the initial wave. A lot of people, want to wait for some type of fib retracement. Sometimes the market doesn't accommodate them. Maybe we're just only going to get 38% here.
Yeah, totally.
Totally,
yes. I mean, it's typical for some moves. We have to be patient in the market, but too patient doesn't make money either, right?
Yeah. So after this, people saying, well, myself included, I'd sure like to buy it. 105 and 104.50, wherever, and it's really being held. Everyone check out the moving average on the 4-hour TF and look at where they're intersecting right here. So 107.20 is going to be a big number with these moving averages converging on the daily. So we're on the verge of getting a golden cross, aren't we?
It looks like it, yes. It does look like it. I'm still having a bit of difficulties to see how ECB will get more hawkish than the Fed, but it's possible. As for
lay down on the couch and we'll talk for a little while. I don't want you. You have a lot of stress about it, but I'm just kidding around with you. But yeah, it was a reversal month last month. So
it was indeed.
We'll see. Just reversal week. He had a right here and month. So maybe that was the bottom. The RSI work says no on the weekly, blew out the divergence, but this is going to be the big test. If you want to call change of trend, probably have to get back above 110, don't you think?
Yeah, but in my opinion, already the 108 figure 30 is going to be a very big piece to get over. Quite a big hump to get over, in my opinion.
How do you like hosting a show?
It's nice.
Fun, isn't it?
Yeah, it's going smoothly.
Yeah.
Today I did a bit of a solo performance.
Yeah,
it's nice. It's nice.
Yeah.
You did a solo performance. Are you telling me that Stelios didn't show up today?
He had
I had a small emergency with my kid at school.
Dude, that guy is the hugest slack. Oh, I'm sorry. Is he here?
Yeah,
I'm just kidding. Stelios, are your daughters okay?
She's better. Yeah, yeah. One of the two. One is fine. The other one wasn't feeling well today, but she's better.
I see. So how did it go? No, I'm gonna ask you this because Dale was just asking, and then I'm gonna shut up for a minute. But how did you like the experience of being on your own for an hour?
No, it's okay. It's okay. I'm in my bank days. I met with a lot of clients. So there you end up talking for half an hour without even them paying attention. So that's fine.
Yeah. Well, Ann Soriano said you did a great job.
Well, thank you so much. And he's been there from the start.
And you know who else did a great job? Blake Morrow yesterday, right before it happened, guys, was showing the important area in gold. And, I think Blake, great call, and Greg, a great call.
Thank you.
I mean, it's a night. You have $20 if you wanted to flip, take a piece. But you got to hand it to
Stelios. He's bullish gold every day.
No, so, I know, but you brought it up and said yesterday during F.A.C.E. That you guys were talking about this 1830, 1828 level, and that it definitely was a better long than Aussie.
You guys want to see a big move? Something we were talking about yesterday with the ForexAnalytix clients. Just take a look at copper really quick.
Yeah, I saw. Where'd that come out of? A reopening or?
Well, it just has been very bullish. It's been holding up very well, and it just broke out. And that's something that it's one of the reasons why I got long Aussie dollars yesterday. So, I bought some Aussies, I bought some euros yesterday, bought some Rand, bought some peso. So I started buying all those pullbacks yesterday, and there's a bunch of bull flag patterns setting up. But I'll go into those charts here in a minute. I want to hear just any other further thoughts. What happened? Like, anything big happen in Europe? Kman, Stelios, anything that you guys seen? One of the big things that happened last night in Asia.
The world was around.
No, well. Right. Now, one of the big things that happened in Asia last night is when I was doing the trade-off show with Chris Weston, is that Saudi Arabia said they'll ramp up production if Russia falls short. So what that did is that put crude under pressure. I mean, crude was
talked about it yesterday about it possibly being a failing rally, and looks like when Biden sent his people out there, they had some type of deal together. So this could be ominous if it's a failing rally and we have something like this, or a fib extension from here of what this move was, and break down under 94.
Yeah, let's hope so, because I was sitting there looking at I was sitting there looking at crude oil prices, and then I was looking at gas prices in San Diego or LA were marking up at $8 a gallon, that's just crazy.
They re-engineered all the pumps to be able to go to 10. Okay, they only had the digits and the cents, so get ready for $10 eventually. If they're preparing the pumps to go there, it'll be a magnet.
Holy cow! Wow. All right. Well, hey,
Europe has that many digits.
So we didn't get an answer from Stelios and
oh
Kman.
Yeah.
What happened in Europe other than those are the things that I noticed? Anything big?
No, nothing big. Swiss CPI overshot. Euro Swiss dumped 40-50 points on it, but we're back to where we started. European PPI, came out still up in the clouds, to be expected, I reckon. We saw the comeback of the Aussie, and then as well of the sterling. Sterling rallied a big figure from yesterday's lows, without too much of a reason, because I've been scrutinizing the news but haven't seen anything coming out on sterling. Euro sterling is still in its box, but the cable rallied up to 125, 50, 60 again. Small intermediate resistance, as I was saying on the flow show, between 1/2 and 3/4 here, I reckon. And then we'll see what's going on.
Okay. All right. Well, Stelios, did you notice anything? I know you're running around with your daughter. So anything that like stood out to you overnight?
Nothing more than Kman said. I mean, we're almost at 3% inflation in Switzerland, of all places, which has historically been like 0, right? So, I mean, that shows you inflation's everywhere now, and it's sticky. And like Kman said, Eurozone PPI 37.2% year on year. I mean, it's still climbing. That's the thing. It's below expectations, but it's still climbing. So, yeah.
Yeah. Okay. So I'm gonna stop for a second, and because you said that, and he's probably listening in here. So Dale, you know who I met with yesterday?
I'm not sure.
Kanye
Ben
West.
Maldonado, your buddy Ben.
Okay.
And I had an opportunity because when he met with you here on the F.A.C.E show, and you interviewed him like 2 weeks ago. I was listening in, and I listen in when he presents. I try to anyway. But Ben is here. Hey Ben, and I met with him yesterday, and we had like a good 45-minute conversation. And so Dale, thank you for introducing us, because I got to meet with him and talk to him about his cycle work that he does.
Yes,
and he pulled up a really interesting statistic of, what, and this will be out for you guys' review over the next like 24 hours or so. But he pulled out a chart of inflation, from, in the 70s throughout the 70s and early to mid 70s, all the way to the late 70s. And inflationary pressures were hot for a long time and very sticky. And he was talking about a potential repeat of that. And so I think
you get dips, but it keeps reemerging.
Yeah, exactly.
Yeah.
And so I think you guys are going to really, really enjoy his presentation from yesterday. So thanks, Ben, for joining me. And I know he does listen in here quite frequently during the days or for the F.A.C.E show. So really, really interesting. And I think you guys are going to enjoy it. I had a lot of fun, and
you will.
Yeah, and Dale, I wanted to say thank you for finding Ben. There's, he's a lot of
We've been talking for about 3-4 years now, so
yeah,
it's about time you invited him.
Yeah, I'm glad it did. So anyway, but really quick, I want to cover a couple things that are developing. We got the ADP numbers coming out, and I do think that data matters right now. I think data is important, especially with jobs data. Because if we're going to have really hot inflationary pressures, and they're going to be persistently sticky, and then we need to have a labor market that keeps up. Because if we don't, then really, if we're not dealing with stagflation now, we're going to be dealing with it in the very near future. So that's something that's going to be very important today. But I want to focus on some of these dollar pairs. You got the euro dollar. The flag pattern isn't as apparent, but notice what we held. The 106.30 level was remember, that's the spike low from post-COVID spike low in the euro. That's why the 106.30 level is so important. And you can see it's a big blue line that we've had drawn for all the way back here, and it's going to be important. But it also is the 38% retracement just below that of this entire move. But you can see how that is consolidating for, when you consolidate your gains like that, that price action is really bullish. Sterling's giving you a very similar type of look as well. We held the 38% retracement. And if you just look around, like the Aussie, there's no give up here. We're near the most recent highs. We still have to, complete the inverted head and shoulder pattern at 72.72. So I've been buying, I sold everything yesterday that I was long. Well, I was actually, short dollars yesterday, and then I reversed right back into them, after the dip. So, anyway, I picked up everything on the cheap today. Let's go over to the calendar. We're going to pull up data flash because we do have ADP data coming in 10 seconds. So let me move that out of the way. Let's go look at the yen, because the yen has been kind of sensitive to yields and and it looks like it's getting a little perky here ahead of the data.
Right.
We're expecting a big
300.
number.
Yeah, we're expecting 128. So that's a miss.
Whoa, a little bit of a miss. What? That's not good.
Well,
but you know what that's good for? I know this, good, bad is good is bad. That we're in that world again. If you don't understand why we're in that world, if the data is bad, people bad or disappointing, or it's a miss, the market's going to like it because the market realizes that the Fed could be more dovish, right? So just realize that it's not, we're not in a good news, or good data is good news. It is good data is bad news, and bad data is good news. So just, we are in that world. I hate that world. Don't you hate that world?
Hey, Blake, I was wondering.
Wayne's world. What?
Party time. Excellent. Yeah.
Yeah, I was wondering. There was a neckline in the notes that we had a breakout out of, but TLT looks like it might be. That might have been it. I'm wondering if it's a false breakout that we had notes.
Okay, yeah, and I know where you're going here. Let me pull up the 10-year
shoulders.
Yeah, so I actually had to redraw my head and shoulder pattern yesterday. So I had it like this. So I had it like this. Let me just here. I'll just move this over. So I had it drawn originally like that, and then we broke out. And I was like, oh, it's a complex head and shoulder pattern. I wasn't like totally sold on this little dip here, but now that we're, really dipping, I am looking at it more like this. And as the analysis, let me just show you. Here's the 10-year treasury. Here's the basic technical analysis. And if you read the update from yesterday, if the lows around the 118.50 level manage to hold, an inverted head and shoulder pattern may still be developing. And that's why I redrew it last night in the nightly analysis. If you guys don't know this, I do all the updates for the basic technical analysis every night for all of these instruments. So this way you guys get, my most recent views, because the weekend analysis is done by the rest of the team. And so, I'll just give it to you throughout the course of the week. But that's how I redrew it, Dale. So I'm glad you brought that up, because and sometimes you have to. I mean, when you're doing analysis in the markets, you have to, change up your, what you're looking at from time to time, because it's not perfect. Never is and never will be, will it?
No.
Yeah. Yeah.
All probabilities.
Yeah, it is, and so I'm actually hoping that we see a rally back in bonds. I'd love to see yields come down a little bit. I think it'll really help the markets. And look at speaking of the markets are trading a little heavy. But let's talk a little bit about the S&P and about risk. I was talking to Chris Weston last night, doing the trade-off show, and I asked him. And speaking of bull flag patterns, I said, what do you expect, Chris? 4,300 or 40, what did I say, 4,300 or 3,800? What do you expect first? And he said 3,800. He thinks that we're going down before we go higher. What do you guys think? I'm asking you guys at home, and I'm asking Kman, Dale. I'm going to ask you, and I'm not asking Stelios because I don't care what Stelios has to say. So I'm just
one of these days, man. I'm going to come to
Arizona. We're lucky we're not in the same vicinity. I would get smacked all day long. Anyway, but how do you guys know? But jokes aside, how do you guys feel about equities? If I had to ask you the question, 3,800. Or 3,800 or 4,300. Where are we going first? What would you say? Let's start with Dale. What do you think?
43, Blake. And if you measure this as a flag, it measures 46.
Right. Oh, look at the big brains on Dale. All right, I like it. Okay, let's say we got a flag pattern.
Yeah.
And let's extend that out. At 4,600, really? Maybe I'm crazy here. Oh wow, it does. I see 44.50, which, by the way, is the 200-day moving average, just for the record.
Okay,
that's the 200-day moving average.
Okay,
but hey, that's interesting, Dale. Okay, I like it. All right, so Stelios, what do you think?
Can't change your
Come on,
mind.
it's a tough one.
It's a tough one. I think I stand by what I've said. I think that the Fed is going to stay hawkish for now. I think yields are going to go higher. So that's why I think we're going to see 3,800 before. First, and then we see. So I think we're going lower.
You want to do this with me again? You want to go around?
The pain trade the pain trades go higher. That's what worries me.
I think the pain trade is higher. I think
everybody's
really bearish. But what do you think, Kman?
I hope for 4,300 to then give it a serious knock on the head to go back to 3,800.
Yeah, I mean, first of all, let me, and this is what I had to be clear with yesterday. I do feel that the stock market is eventually going lower. I just feel in the near term, as Stelios pointed out, the pain trade is higher. And I like the fact that we're holding 4,100. And yesterday and remember, 4,100 is a big deal to me. It's the neckline. You've heard me call it the line in the sand for you guys. And that's kind of where it's at. And I think as long as we're above 4,100, we got to keep looking for 4,300. And I think that's really what we're dealing with right now. But notice how this flag is developing. And I think today, if we get above 4,150, we will challenge these highs back at 4,200. So anyway, that's kind of what I'm thinking. And I wanted to bring that up because I do see flag patterns everywhere. I mean, you look at like the
you stole my line.
What's that?
You stole my line.
Oh, I know. Wait, and yesterday, flags everywhere. But what were you saying yesterday? Triangles everywhere, or no? We were saying that.
I said a while ago. I was saying like I'm seeing triangles everywhere, but flags everywhere.
And that's it's interesting because when you see a consolidation, and you can see like here's the Kiwi. You can see very similar type of moves, right? So when you see like flags develop all over the place, or let's say triangles, and the nice thing about our markets is they are all correlated. Correlation trading is not something that you have to trade like consistently. Like correlation is not causation. However, when you have everything kind of jiving at the same time, and they all start to break out simultaneously, that's usually pretty powerful. So if you got, consolidation triangles like that are developing all over the markets, and then all of a sudden, you get the euro rallying, and then, next thing you know, you're like the euro rallies, then the Aussie rallies, then the Aussie rallies, then copper rallies, then copper rallies, then stocks rally, then stocks rally, then, you get a little domino effect in the market. So when I look around and I go, wow, everything's setting up for dollar bearishness. We've got the dollar index that rejected the 38% retracement last night. Right. Just so you guys all know.
I think the market's embracing a weaker dollar.
Oh yeah. The market definitely wants a weaker dollar. You got the dollar index the market loves a weaker dollar because the dollar is definitely at this moment in time the cleanest shirt or the cleanest dirty shirt in the hamper. So everybody, knows that the dollar is going to reap the rewards when we have risk aversion. So if the dollar is, under pressure, it's going to keep the stock market elevated. And you got the S&P that's developing the flag pattern as well. So yeah, Dale, if you see, the dollar break down against multiple currencies at once, then you have gold, which is already, you go back to like the analysis from Gregor Horvat yesterday, and we talked about it holding 1830. If it breaks 1870, you got a bullish development in gold. Let's say these cryptocurrencies continue to hold. I know cryptos trade like absolute garbage right now, but they're not breaking down. That's the one thing we should, note. Like you look at Bitcoin, and we're holding up after that probe through these lows. We are still holding up. But if they can continue to hold, gold holds up, the dollar starts to pull back, stocks are going to go, well, I guess we should be going up too. And like I pointed out, copper, we got a breakout yesterday above that 38% retracement. And man, it's been on a tear through the 200-day moving average already today. I don't think I would chase it up here, but I would be buying dips in copper. So, these are all just those things that are really, pulling together that make it look like a risk positive type of scenario for right now. You know what else is standing out? And Kman might be able to guess this, but and maybe Stelios as well. It's something I just posted in the chat room just a little while ago. Do you know there's something else that's really developing in the currency market that suggests that we could have some risk on? What do you guys think it is?
The one.
That's a good guess, Dale. But Stelios, Kman, you have any ideas?
No.
Oh, you don't? All right. Well, the Euro Swiss, check this out.
Okay.
So yeah, the Euro Swiss is holding up around the well, first of all, there's a daily trend line, but notice the 618 retracement. Now, Kman, what happened overnight in Switzerland?
The CPI rose, Euro Swiss went 40 points lower and then bounced.
Oh yeah, and so really big move. That actually is a really nasty.
Yeah.
That's a gnarly ass looking move. I mean,
Yeah,
look at,
then if you look at Switzerland, as Stelios was saying, an inflation of nearly 3% over there. There must be like all the snow on the mountains must be melting right now.
well, I mean, look at that. I love the fact that it probed and it looks like, and if you ask me, it looks like Swiss National Bank intervention there, right?
They always intervene, don't they?
They're always in the markets. But what I like about it is that you probe below that support, and now you're at the 618 retracement. You stopped out anybody who was long
Everyone.
the last couple of days, and now it's like developing a nice risk reward to be on the long side. You don't want to risk below the lows, right? You don't want to risk below there, but if we can hold here, and I always look from a risk reward perspective, if my risk is here at 102 and my reward is up here at 104.50 and we currently trade at 102.60, well, let's do the math, right? So you go stop loss 102 and price 102.60 and target 104, and I'm just being rough here. So your risk reward ratio is did I say 10? Wait, hold on. 104. What did I say? 104.50. Sorry, let me go ahead and.
If it ever breaks over that flat line, it's a huge move.
Yeah, I mean, well, let's say I'm just buying, 100,000 worth of currency. I'm risking 500, 600 bucks to make 1,800. That's a good risk reward ratio. 1 to 3 risk reward ratio. Why? These are the types of trades that, as a trader, you look to take. Right. So I don't know. I look at that and I'm like, okay, well, that is going to perform well in a risk environment as well. And then you got the dollar CAD that's hitting new lows. You've got you got the dollar CAD that's trading, new lows of the session, right? You got dollar MEX that is breaking down again, big rejection of the 1975. This is why I shorted the dollar MEX yesterday. And if you guys are in the ForexAnalytix chat room, if you go over to the trades room and you can see my updated positions from this morning. All right. But you can also go back and say, oh, well, when did Blake get into those? And then you can go all the way back through the trades room, say, oh, my open position's back there. And you can see from yesterday. And then, these are the things that we do for the community. So this way you have, different trade ideas, and you can, what I'm doing and what I'm trading doesn't make it the right trade, but at least where my head's at, right? And that's and don't you think that's the most important thing about having like a chat room with having trade ideas is not, you don't have to mimic. Like I don't mimic what Kman does. I think Kman, by the way, you're one of the worst traders I've ever met, and I'd love to go opposite Kman. No, I'm joking.
What? It's an asset to have.
It is an asset because if I know where Kman's head is at, and I know exactly what you're doing, and I respect what you're doing because I do, then I'm going to think twice about it if I'm going opposite you, right?
Yeah, to have a perfect inverse indicator in the room is the biggest asset one can have. I remember one of our strategists in the bank. Whenever he put out a piece, you do the opposite, and it's 100%.
But that's not how I look at you, Kman. But we have a lot of traders in the chat room that just put in, we put in what trades that we're doing, just so you have an idea what we're thinking. And that's why I'm going to turn to the sponsor of our webinar. It's the Trader Funding Program. If you guys haven't checked out the Trader Funding Program, this is it. If you want to learn how to access larger amounts of money, you can do it this way, and you get ForexAnalytix for free for a certain period of time. And that's why I'm talking about the trades room, the general chat room, the Flowonomics room, where they're talking about macro ideas. Spanish chat room. We have news and research where everybody posts like different data and you see Kman putting up Bloomberg headlines here, and different research reports that we read, and then we have our general chat room that we have. And now having that is so vitally important when you're going through like the Trader Funding Program. So this way you have a community, you have ideas, and then, obviously you get ForexAnalytix on top of that, which is a wonderful tool. So Stelios, Kman, Dale, thank you guys for spending the time. And Dale, have a great interview with Lydia. I think Lydia is here, right? Faith
Yes.
Might?
Yes.
Awesome. She's always great to have, especially, looking at the cable right now, because the cable's been a big hot mess. So you guys all have a great one. Thanks everybody. And if you're in the ForexAnalytix community, I'll see you on the Morning Edge show in about 45 minutes.
Thank you.
Thank you, Dream Team. Welcome back, Lydia. Haven't talked to you for a while. It's great to have you.
Yes. Hey, everyone. Hey, Dale. Thanks for
Hi,
having
Lydia. You globetrotter. How are you?
me. I'm fine, thanks.
You're a busy
Hey, Lydia,
woman
welcome
lately.
back.
Hey, Blake. Thank you.
Yeah, so I'm glad you found time, and excellent time to be talking about perhaps a cable low. I'd love to see your work and what you're thinking, but first of all, tell me what you've been doing lately. What's been dominating your time, and what's on your radar?
Oh, wow. So, I guess investing in general has been dominating my time. More investing, less trading. As we've been investing in the private markets and doing venture capital a lot more, doing venture.
You have branched out.
Yes, I've added VC to the portfolio. It's been a lot of fun, and it's been interesting to see Forex, not just trader, but like just the different uses in other countries. And then when you see price action in the markets, for me, there's some understanding and some interesting insights there as we're looking at everything move, particularly now.
Do you want to share your screen?
Sure.
Today, and I would guess, I don't know if it comes into play, but dealing with all these different countries, I know your focus is in Africa, that a lot of these transactions, being able to advise clients, what currency they should be in before you do the deal, or they sign up and do accounts. Is foreign exchange a big part of what you're doing, besides meeting people and collecting assets for your projects?
Yes, definitely. So it doesn't surprise me that we see dollar strength all over the place.
Yeah,
because there's still a very much a demand for dollars, especially when you're doing cross-border transactions, whether it's investing or whether it's just simple commerce and trade.
yeah.
There's still a demand. There's still a demand for dollars. People still want to transact in dollars.
You would expect that anyway for a while, but do you, your work telling you that it's possible that low at 22 may be setting the stage for broader strength in cable against the dollar, just like commodity currencies are performing? Do you sense some type of turn developing here, Lydia?
Yeah, and I think when you look at the weekly chart, you get a sense of why we're finally seeing some strength in the pound dollar, because we've just had such a fantastic fall cable, which is just this crazy amount of strength in the dollar. Here it is. Okay, there we go. And to me, it's necessary for us, I mean, as always, to find this correction. So I just think that once we see this U-turn that's happened in the past 12 months, or maybe even almost 18 months or so, and you have to ask yourself after a fall like this, where's a bottom? Now, it remains to be seen if this is a temporary bottom or if this is truly going to be a reversal in the pound dollar. And I think you have to watch what the Central Bank of England does, because they've kind of been behind in expectations of interest rate hikes. And I think that's, at least for this pair, and I think maybe for the dollar, it's been the anticipation of interest rate hikes. So now that we have the hikes, it's classic. You buy the rumor and you sell the news. We're now seeing a little bit of a sell-off in the dollar, but to me, it's still a correction. So you all can see my lines here. My Fibonacci.
Would it have to get back over 130 to be convincing? That was a big breakdown.
Yeah, and I think even sooner than that, you would want to see. I think you want to see it above $1.2775, which has been was a huge support in cable. And so if this, it's all about whether or not we see a hold, we might get a break. But if we get a hold below this, a hold above or below $1.2775, that could be indicative of future direction.
That's
and
your line in the sand.
Yeah. And the way we broke below that, yes, $1.30 for sure. But the way we broke below $1.75, 27.75, just to take us all the way to 22, it was the break, and it was then the hold below that.
Okay, I want to acknowledge that I don't remember the last time we were on. Do you? How many months ago it was?
No.
Just ballpark. But anyway, I asked you about equities, and you were cautious and actually bearish, and said that the people you were talking to, and with rates, and you've seen this movie before, so I assume you were able to move a lot of your clients into less exposure or hedge, or how did you handle this decline? You recognized it. Did you do anything about it?
Well, it depended on your time frame. So that's, I tweeted that. It all depends on the time frame. I can pull up my equities chart here. I was looking at it before I was.
That was a great call, Lydia. So,
thank you. And I still think so. So depending on your time frame, a lot of my clients are young, so it doesn't make sense to move. It actually, what we did, instead of moving people out, I'll just talk about my younger clients, but instead of moving them out, what we did was we just stopped buying, and we're just looking up for where to buy. So that's kind of where we're at now. Okay. It's like I tweeted this, maybe it was, maybe it's a week. I guess it was 2 weeks ago now. But it's all about, to me, 38.15, because 38%. Even though I say we're in a bear market, because I think that we can grind lower. I don't think it's a market crash type of situation, but I do think that we could move lower, but it will be a grind. It would take, it will move slower than I think we've seen in past market downturns. 2020, was it 2018? Before that, I think it will. They happened so fast, and then the subsequent recovery was fast as well. I don't think that will be the case this time. So I'm watching to see how equities, or the S&P in particular, stays above this 38.2, which is at 38.15. Because remember, with Fibonacci, a shallow correction is actually very bullish. Yes. So if we can stay above 38.15, and now we're back above 4,000, which I know is a line a lot of people are looking at. But for me, it's about 38.15. We stay above here. Maybe we meander. We can do some consolidation around this level, maybe below 4,000. and then we can find more strength. That's a very bullish, actually quite a very bullish development. It's the kind of correction buyers will want to see in any market. 38.2, a shallow correction. We find some accumulation, consolidation, and then whatever the fundamental catalyst becomes that allows more risk appetite in equities in particular. So right now, I'm not in a rush. You know how summer months are in the market. So no rush, really looking to see how this holds support. It's quite possible that in the opposite direction, you know, it could be that, I mean, we're just, if you're bearish, if you're, you know, a seller, this is a nice correction in the opposite direction, right? So it's possible we could turn lower. So, and if we do, you know, I'm looking at the 50% line, which is 3,500. I still wouldn't be panicking at 3,500. I think I would be a very comfortable buyer at that level. Right now, I'm cautious still because it's possible we get a deeper correction. It's possible we just consolidate and move higher. So still just cautious about it, especially because for the sell-off that took 5-6 weeks, we're correcting.
You're so strongly neutral here.
Very neutral. I'm not, it's not a panic. But you family say we're in a bear market, and it's mostly because I think that we can grind lower, but it's going to be, I think it's going to be a slow go. I don't think it's going to be any kind of panic selling. I think it'll be a slow go, which might catch younger traders who haven't seen a bear, like a real bear market. It could be.
They've never seen one.
Not a bear, they've seen crashes. So that's, you know, they've never seen like a grind out bear market, equities are down type of situation. So
where months and months and months of not turning. I wanted to also get your take on, you know, most investors have a mix of bonds and stocks and cash. And I don't know about you, but it's the first time I've seen risk off being led by the bond market. Where were the losses heavier, in people's bond portfolios or stock portfolios?
Bonds.
Okay. All right. Well, that's what I thought. I mean, it led the whole thing.
Bonds fell apart.
Didn't you think there might be some buying might come in on some of those, you know, 150 point, 200 point S&P down days that there wasn't even a bid in bonds? So
price in bonds has been really surprising. I think the biggest surprise to me is everything's been down. So a lot of people want crypto to be a safe haven. It's not. At least not yet. Gold hasn't reacted in this risk off environment, I think, as expected because of the strength in the dollar. So it's just been a very interesting, I mean, you know, what do they say? This time is different. It's
all one market. They're all expanding together and contracting together, just in different degrees. I think the linchpin is the dollar, don't you?
Absolutely. That's the common denominator. I agree completely. And here we moving people out of bonds because this right here, we have a signal of a reversal. So if we're staying below 118, we could actually move lower, folks, you know? So you're talking about the last time we were here was 5 years ago? The taper tantrum was the last time we were there. And I mean, all the COVID gains completely wiped out. It's gone.
I wanted to wonder. You know, the yen has been on a tear. So I'm curious what Guppy looks like to you at this stage.
So Guppy to me did a turn when it did this, what I thought would be just a correction to 160, but it did this move to 155. And to me, that was a reversal. You can kind of see like it kind of, it's almost a U-turn of this move. I expect it now to move lower. I actually expect it to move into 150 as the yen starts to finally gain strength. I really thought that the yen would be stronger in this environment, and it just it just hasn't been, right? We've seen the yen pair at levels that we haven't seen in a long time.
It was a monster.
Yeah. The sell-off was crazy. It was crazy across the board. So it had me looking at a dollar yen a lot. And it was the same thing. Strong dollar. And so this is really the only currency that the pound could find strength against in recent. Well, I guess this and the euro, actually. The yen and the euro is probably the only currencies that the pound could find some strength against. And it looks like we're turning as yen. The pound is just turning weaker across the board here as well. We look at the euro pound.
Yeah, euro pound made its low months before the euro. And so euro pound was giving buy signals while the euro was still making new lows.
Yes.
What do you think? Over 86, we could be looking at 90, don't you think?
Yeah, definitely think so. And I think last time we were together, we were around 86 maybe. And I was looking at
big area.
This big area here. I think we can see it better on a monthly chart. We were looking at, this 82. We were looking at these and we're around here and saying we could still fall here, folks. And you can see, it's a correction on these larger time frames. But you know how the euro pound likes to move. It takes its time. So
it's been sideways for 6 years.
Exactly.
I mean, we could it looks like we could in a bull market in euro, we could probably even take out those highs.
If we see the euro recovering, definitely. And a fundamental catalyst for that could be a ceasefire between Ukraine and Russia. That could be a catalyst for more euro strength, which I think that's been the drag on the euro. I think just coupled with risk aversion that a war would cause.
Yeah, what a classic buy the rumor, sell the factor. People buy headlines. The euro bottoming on the first war in Europe in over 70 years.
Right.
And being dependent upon Russian oil. And so, I mean, the backdrop is still, in their economy weaker in measure than the US. So there's not one reason to buy the euro. That's why I liked it down there. So I think the interest rate differentials may be repriced, but any view on, let's see. So we may as well get to at least one commodity currency because I think they've bottomed. Okay, the rally in Canada, USD CAD, and the pullback in Aussie were shallow, and there you go. Okay, so commodity currencies are going to outperform cable probably for a long time, don't you think?
Yes, and we have this support here. We're kind of a triple bottom, which means that this support level was this 155? Yes, 157. Sorry, 157.50 is which is a great level.
I don't think I'd short this here.
Yeah. So if we're holding bottoms here, we're holding
a little stop on first. Yeah.
We have to get above 162. Once you get above 162, and we have some support here, some formal lows. So 162.75. We take that out again. We hold above that. Yeah, absolutely. We can see a move back, really back long term, back towards 170. We have this moving average here, but I really love this. I love this bottom. It's still 100 pips from support. So you want to be careful about picking your entry, but this is actually a great entry. Short term, again, we could probably make another stab back at the lows just because.
Yeah, clean the stops out, Lydia, exactly. Unless we already have.
Yeah, and they're just buying, and then sellers coming in on a fib on this down wave here. And so we could still see a stab back at the lows. I would be comfortable stepping in on a buy if we came back into support. Okay.
Any market you want to wrap it with before we talk about where people could follow you and show, everything you do? You're such a Renaissance woman.
Yeah. Oh, thanks, Dale. You know, I think we have to wrap it up with Bitcoin. I mean,
Okay. All right. Are you having people do anything in there?
Oh,
Your
my
clients
goodness.
want it. I know the millennials want it, right?
Yes. Yes, which
Okay.
makes clients want to understand what kind of exposure should I have to it. So I think it's been interesting in this space to see the products that have been coming out, like the ETFs, even some mutual funds. So I think the products around it have been interesting, just an interesting development in the overall adoption and really the demand in digital assets. But boy, has it sold off. And you know, Bitcoin being the king of them all, kind of leads the market still. I know people want it to be otherwise, but Bitcoin still kind of leads this market. Seeing it drop from 67,000 down to 25,000, but below 30,000 it's taken time. It's taken time, but it's actually a call one of my analysts made back in November, and it was one that I disagreed with. I said, I don't know how you can call Bitcoin at 30,000 when we're headed towards 60,000, and then it went higher still, right? But ultimately he was early, and he's ultimately right. To his credit, he said it will take some time to develop, but we're going to 29,000. And wow, what a
Who
call
said that?
was. One of my analysts, his name is Dale.
Okay, yeah.
Yes. And so, yeah, he's really great for long-term calls. You know, and so in I'm more medium term, I think. And so we can definitely have opposing views, but he called it. He definitely called it. He stuck by it. He stuck with it. So even if we fell to 35-ish, 34, he still was adamant that we're going to 29 after a correction into 40,000. So I mean, his view is long, but it's been quite correct. And so, you know, what's interesting to me is this break below the 61.8 level. If you follow me, you know that that's a signal of a reversal. And so for me, I wonder if we move lower.
So if that's a neckline there, Lydia, at 30 and the high was 65, it measures negative 5,000.
And we've gone, you know, we've seen some.
It's not going to pull a crude
out. Some markets turn negative, like crude.
I don't think
not go negative, right?
Yeah, I know it's an exaggeration. Anyway, but maybe 20, huh?
I think a move to 20,000 is still on the cards. Like,
do you own any, or have you become at least open to consider buying this next break in Bitcoin to 20 to have some?
Yeah. I do own some. I've held Bitcoin for a long time, so it's just to me one of accumulation. It's not a trade for me.
Yeah.
To me, I do think that there's a digital economy that's being born right before our eyes, and if you want to participate, you got to have some kind of crypto. So for me, it's just a way that I'm able to participate once this I guess this metaverse comes to fruition. But it's been during the bull times, it's been incredible. I've definitely unloaded. I don't hold the same amount that I held back in 2016. I've accumulated, I've taken profits, just like any other trader.
The portability of being able to take your wealth with you in your pocket on just a little device is attractive, isn't it?
Yeah, and avoiding certain currency risks. So you see, like Nigeria is the second largest Bitcoin market after the US because of the currency risk, because of the devaluation in the Naira, and the difficulty in getting dollars, especially if you are trading across borders or if you're investing. That has driven a lot of this adoption. I don't know if you know, the Central Africa Republic is the second country to make Bitcoin a legal tender after El Salvador. So these markets, I don't think Bitcoin goes anywhere. And to me, I hold it because I want to be able to participate in whatever our future markets and economies look like. Another interesting thing is DAOs. So DAOs are trying to replace, like a mutual fund, but decentralized mutual fund, basically. That's how I see it anyway. That's a view, or a fund. Some people like to look at it as a fund. So all of these things, just require you to hold some kind of Bitcoin so that you can participate in these future market instruments.
All right, Lydia. Well, thank you. It was great hearing your views and your voice. And
Thank
the best
you.
way for people to follow you on Twitter at Faith Might. And
Yes.
how else can they reach you? Want to show your website here?
Sure. So Faith Might is definitely is the handle on all the social media. You can find me on all the social media platforms there, Instagram, Twitter. Twitter is the best place, of course, for market, for my market talk. And then if you're interested in our services, we do advise across asset classes. So we do also include venture capital as well as stocks. So you can check out the website here, fmcapitalgrp.com, and then we put all our market analysis commentary here. And so you can see from myself, you can see from Dale, who's an analyst with us, of just our different views and takes across markets. So Forex, we recently looked at the Kiwi commodity dollar. And then we also, but we also have stocks in here. I'll do some VC commentary. So that is how you can catch up and keep in touch with me.
Well, again, Lydia, I always root for you. Congratulations on, the expansion of what you do from, just really paying attention to the pound to becoming a expert generalist across the board. And really appreciate you giving some time and coming in here and hanging out with us for a half an hour today.
Thank you so much for having me. I really enjoy the community here. And you all do such a great job, the whole dream team. So this is definitely always the community I love to come in and visit. And thanks, guys. I'm looking in the chat and I love this. That's about the most sober crypto strategy analysis I've heard yet. Thank you.
Yeah. Yes. Thank you for being so grounded, Lydia, and centered when you talked crypto today. So we're all fans of yours, Lydia. Continued success. And I'll get in touch with you via Twitter and we'll get something set up for the fall.
Awesome. I love it. Looking forward
all right.
to it.
So don't just count your pips, count your blessings. Having Lydia here is one you could count for today. And everyone have a great day. You could join the team on the Morning Edge in 18 minutes. Adios. And thanks again, my trading warrior sister, Lydia Idem Finkley.
Thanks. Thanks, Dale. Thanks, everyone.
See you, Lydia.